Let's get back to our conversation on the group and the audit of the components. So we looked at the communication with component auditors, and right now we'll continue with our conversation on the involvement of the group auditor in the work performed by the component auditor, the involvement of the group auditor in the work performed by component auditor. And by the way, please, can you confirm you can hear and see my screen, please? So I don't assume. Oh, thank you. Thank you for that. All right, thank you. Okay, so the group auditor decides both what work the company auditor performs based on this letter of instruction and how much to be involved in that work, especially for significant components that are material to the group. So the group auditor needs to be sure on the work the component auditor is performing. So for significant components, minimum involvement includes area of the auditor discussing significant business activities with component management and the component's auditor. So the group auditor must ensure there's verbal and documented discussions around the business activities for him to be able to understand practically the components, and also discuss risk of material misstatements in these components' financial statements. And also he needs to review the component auditor's documentation of identified risks. So he needs to really discuss and also review some of these components output. So when there are significant risks, the group auditor needs to evaluate further audit procedures, needs to evaluate and perform further audit procedures on those components. He also needs to decide whether to be involved directly in the audit. And these possible involvements include meeting the components management and also speaking with the component auditors very directly. He also needs to review the audit strategy and the plan around areas of risks that are very significant, high-risk areas. He also needs to, if possible, perform or assist in risk assessment, assist the component auditor in further risk assessment and further testings, either directly or directional. He also needs to attend meetings, key meetings, closing of audits, issues around communicating correspondences with the component auditors and management of those components, and also review key documentations around that. So generally, he needs to meet with the component auditor, with the management. He also needs to review the job done by the component auditor, and where necessary or where not satisfied, he needs to perform additional assessments or testings or additional procedures, attend meetings, document everything around significant components. And for other components, his involvement depends on trust and also competence of the component auditor for other components. And if competence or regulatory compliance around the component auditor is doubtful, then he needs to increase his involvement. But where they are competent and he's okay with their independence, objectivity, and the regulatory compliance, then he will reduce his involvement, especially in risk assessment. Also, the evaluation of the component auditor's report. The auditor must evaluate the adequacy of this component's audit report. How significant, how valuable are the findings? If these findings are not sufficient, then he needs to determine what extra procedures he will need to gather more appropriate, sufficient audit evidence. And who should perform them? Who should perform these extra procedures? Is it the group? Is he the person or the component auditor he could mandate to perform more work around areas specifically that are of significant concern to him? So, for example, the group auditor noted weak audit regulation in a foreign subsidiary. So he decides to attend the planning meetings, the review of risk assessments, and perform selective testing on the revenue of that foreign subsidiary to validate some of his concerns. So exam tip around this, the auditor needs to focus, the group auditor, on minimum involvement for significant components based on risks. So he needs to decide and also review, and actions will provide additional work where he finds the component's job insufficient. So this should be your focus around the involvement of the group auditor in the work performed by component auditors. All right. Any question? As we're running. Oh, fantastic. So we're done with. Okay, we're not done with this unit. I thought we are done with the unit. Okay. So any question on that? Any question? All right. So let's go to another significant topic, another area where the examiner tests somehow frequently, speaking to joint auditors or joint audits. So a joint audit involve two or more audit firms jointly auditing a single entity, and they're also signing a single audit opinion on an entity's financial statement. So two audit firms are auditing an entity, and the opinion is signed by the two or more audit firms that were engaged in the job. And joint audits are actually common in group audits, especially after acquisitions. So when a group has acquired another major group, joint audits are always the order of the day. When Standard Trust, when UBA acquired Standard Trust, I could remember the auditors that time, I think it was PwC or so. And PwC were auditing UBA, but then when they acquired Standard Trust, I think the both auditors for Standard UBA and Standard Trust had to come together. I think it was PwC and KPMG or so. I'm not too sure now. But then when there are acquisitions like that, there's always joint audits, and sometimes it's mandatory. So, for example, in France, listed and consolidated entities have to have joint audits. I think it's part of their regulations there. And this promotes audit quality to some extent. It also enhances healthy competition and knowledge sharing among these powerful firms. Not the same as a shared audit, actually. One firm signs joint is not the same. So both of them are responsible for the audit. They sign intermittently together. So all firms sign the audit report, not that one is above the other. That's why it's a joint audit. And the advantages is that the reasons for appointment around joint audit is suitable for very large clients needing more resources, large clients, bigger entities. Another advantage is that it helps transition after acquisition. So the old and new auditors collaborate based on knowledge sharing and the findings to ensure that there's adequate coverage of the new group. Also, it provides broader technical expertise from different firms coming together to share the same ideas and audit. It also enhances geographical coverage where there are large firms. So an audit firm will concentrate on a particular geographical coverage, another one will concentrate on another. So it allows medium firm to also compete with big four firms. Sometimes you see some of these joint audits, big four doing the audit suite jointly with maybe a big five or big six, So it allows this medium firm to also compete with the big four on large audits, thereby closing that gap where big four are always used for these jobs. All right, so you need to remember areas around joint audits and the advantages, the disadvantages, but the advantages speaks to the largeness and for coverage. Also transitioning around geographical areas and the transition speaking to areas around mergers and acquisition, and also for expertise reason, these are the advantages. Then for geographical coverage, then healthy competition are some of the advantages you could remember, because some of these questions come out to what are the pros and cons of joint audits. So you see it in the past questions when we treat them. They are favorite areas the examiner likes to test. So let's look at disadvantages of joint audits. Number one is higher cost to the client. Yes, because he has to pay to different or more audit firms. Inconsistent methods possibly used from different firms because they have different expertise and backgrounds. There could lead to disagreements on division of work. Some want to gravitate towards a particular work, the other ones will say no. So there could be issues and disagreements. The areas around coordination and supervision difficulties could crop up for joint audits. The areas around conflict of leadership between firms, between engagement partners, between audit managers, engagement quality reviewers could stem up. And liability issues in case of negligence, who is culpable, who is liable. Of course, both of them are liable, so they will have to share the liability. Generally, overall higher administrative costs on the joint audits shared. So generally, these are some of the disadvantages of joint audits around the cost, the methods, the work division, coordination, leadership, liability, and admin costs. So these are generally. So for example, after acquiring Delta Limited, the parent company retains Delta auditors jointly with its own group auditors for 1 year to ease the transition phase and share local expertise with the component auditor. So very importantly, be ready to distinguish between joint and shared audits. It's a regular feature, some diets for ICAN AAA questions. So advantages versus disadvantages are frequently tested, like I said, in the AAA-F paper, and they integrate it with case study scenarios. So please try to understand the concept so that you'll be able to apply it graphically, no matter how the examiner treats or twists the scenarios. Very important. All right, so any questions?
Excuse me, sir.
Yes, please.
Yes, sir. What do you mean by shared audit? Is it the same with joint audit?
Yes, that's the same with joint audits, shared audits. You could call it shared audits, you could call it joint audits, yes. Okay, so pardon me, I think TA asked me a question. I'm so sorry, Toluani, you asked a question. I forgot. I answered Grace's question and I answered Sam's question. I didn't get to yours. Please pardon me. It just came back now.
Okay.
I think I saw my notes. So sorry. Yeah. So you asked about a holding company outsourcing the audit of a component, right?
Yes.
You said, is it possible for yes? Yes. So the answer is yes, it's possible, and it happens quite often in practice. However, actually, it's not outsourcing in the usual sense of like outsourcing payroll or HR or IT. Rather, it means like the group holding company auditor relies on a component auditor to perform the work on a part of a group, like a subsidiary or a joint venture or a branch. So actually, the group auditor could also outsource the audit of a component auditor. If the holding company did not do that, he could do that. So yes, in answering your question, of course, it could happen in practice.
Thank you, sir.
All right, you're welcome. Okay, all right, so let's run. These slides are already on the screen on the group. So if you want to use your phone to navigate through, it's in PDF format, so it's already in the group chats. So please, you can access it freely. All right, so let's look at the 5th section on this, performing joint audits. So success in joint audits and their performance depends on strong communication between both or the amount of firms involved. So communication, coordination, and documentation between these audit firms throughout the stage of the audit will culminate in either success or failure of that audit. So first, communication is very key. Holding joint planning meetings for strategy formulation and regular discussions at key audit stages are very important to ensure the success and performance of an audit engagement. Also, ensuring all meetings and decisions are properly documented based on ISA 230 is very, very key also. And also key considerations for joint auditors is that the independence and competence of each firm and the assessment of the same and the signing of both opinion is very important. So these are key considerations for the joint audit. They are both culpable and liable to the audit because they are signing jointly. And the agreement on the joint audit strategy at early and planning stage is very important, is a key consideration. Also, the coordination of the work and the methods to be used need to be agreed upon. They need to manage their differences based on the firm's methodologies and come to terms together, even if different methods are used, so that it could facilitate the work. Also, they need to avoid unnecessary duplication of efforts, and each firm should concentrate on significant areas, key risk areas, and where they need to duplicate effort should be maybe key risk areas, high risk areas that both firms need to be sure that appropriate job is done on that area. They also need to agree on the work allocation and ensure balance and fairness, not one firm doing more than the other. They need to ensure the balance based on hours required, relevant expertise and staffing, geographical proximity to some of the branches and locations of the company they are auditing, industry specialization, and also they need to agree on mutual review, because each firm must review the other firm's work. And in reviewing the other firm's work, they need to resolve their differences, ensure sufficient appropriate evidence is obtained by both of them before signing the audit report. This is very important. To avoid audit liability, they need to mutually understand, review their work, and ensure that appropriate sufficient audit evidence is obtained for everything they are doing. So the independence, the strategy, the coordination, the duplication of efforts, allocation and review of the job around the joint audit performance needs to be enhanced by both joint firms. So, for example, two firms jointly audit Global Foods Limited. One covers operations in Lagos and the other covers operations in Abuja. They agree on strategy, then they splitted the work by region and review each other's files before signing the joint opinion. So that's an example of practically how to carry out an audit based on jurisdiction or some other factors. So exam tip around joint audits in this area speaks to clear planning, equal responsibility, and evidence of collaboration in writing. Very important, and it's expected that scenario-based questions around this on coordination and documentation could suffice in questions and scenarios where you need to provide input, and also how to apply these concepts practically to such questions. All right, so that's it on performing joint audits. Any questions? Any questions? Okay, so that's it with Unit 4, speaking to working with component auditors. Very key. All right, let's run now to the next unit on auditing the consolidation process. Auditing the consolidation process. The first session will speak to the role of the group auditor with regard to consolidation. The role of the group auditor with regard to consolidation. So the group auditor must understand and assess the consolidation process to ensure that the group financial statements are complete, accurate, and fairly presented in line with this guide of ISA 600. So the true and fair view should be the main objective. And to achieve that objective, the group auditor needs to understand the consolidation process, or else he won't achieve that objective. This is the key idea. So he must ensure that there's accurate transfer of data from component financial statements to group financial statements. The integration and consolidation on data based on the percentages, just like we calculate it in group audits. He needs to facilitate that, ensuring that there's accurate transfer of data. Also, proper consolidation adjustments around goodwill, very key. Intercompany balances, intergroup balances, intercompany transactions, all those nitty-gritties. He needs to ensure proper adjustments are provided and fostered. And also, risk in consolidation are identified and addressed through tailored audit procedures. So he needs to assess risk first based on his assessment and ensure that those risks are identified, evaluated, and mitigated appropriately through some of those procedures. Also, key audit procedures centrally by area, like clerical accuracy around checking figures, transferred correctly between components and in consolidating the group. This has to be performed at the job of the group auditor. He needs to also verify arithmetic accuracy of all consolidation calculations. These days, we don't have issues with this because we have softwares that consolidate most of these things. But then the softwares do the work, but we have to tell the story and monitor input. Very, very key. Also, statutes of investments. The group auditor needs to confirm correct classification around subsidiaries, associates, joint ventures, and the like. So he needs to confirm the status of this investment, which ones are subsidiaries, which ones are associates based on control and those nitty-gritties. He needs to also ensure proper accounting treatment under IFRS, and where a local gap or local standard is used in a separate subsidiary where they don't employ IFRS. He needs to understand that system and integrate it to the IFRS with the reporting framework of the group company. Also, group changes around acquisitions and disposals. So for acquisitions, he needs to verify their fair values based on IFRS 13. And also goodwill, deferred and contingent liabilities around needs to be considered also in the group changes, very key. And also for disposals, the group auditor needs to verify proceeds around gains and losses calculations. He needs to understand how the amendments and their postings are facilitated in the group consolidated FS. Also consolidation adjustments around checking pre and post acquisition profit split. He needs to ensure this is done properly. Also reconciling intercompany balances and transactions needs to be fostered by management and confirmed by the group auditor. He also needs to verify adjustments for unrealized profits, non-controlling interest, and intergroup dividends. He needs to confirm this. Also, loss-making investments or even subsidiaries or joint venture, he needs to test goodwill for impairment around this. He also needs to assess going concern, very important and critical area, going concern based on ISA 570, and obtain support letter. If a parent is backing a critically threatened subsidiary or a component, he needs to get support letter. There was one of our components that had issues. I think it was the Umahia branch. And the auditor that time was telling us that, no, we need to get a support letter from the group. If not, they will not sign the financial statements of that component. So the group auditor needs to ensure this. And this is not even the group auditor, it's the component auditor, because he was auditing the component at Umahia. The group auditors didn't even ask for a support letter. But the component auditor was asking for support letter that with these losses I'm seeing, no. We need to get cover that the group or the holding company will support. So, of course, that was not a significant component as at that time. But then I know that if it was a significant component, the group auditors will also need support letter for that component from the group's board or the group's management. So it's very important. Going concern is very key. And obtaining support letter from the parent to provide backing is very, very important. Auditors need to ensure that. And very critically around related parties, the group auditor needs to ensure IAS 24 and compliance for intra-group and related transactions are fostered. These related parties are very critical areas the auditor needs to concentrate on and ensure that transactions around that are in compliance with the group's policies. Also reporting, he needs to conclude whether the group financial statements gives a true and fair view. And that's the that's the essence of the audit. That's the objective, whether the group's financial statement give a true and fair view. So areas around clerical accuracy, the status of the components, group changes, adjustments, losses, reporting, related parties, and general reporting should be the concern of the group auditor. So subsequent events around reviewing events between component reporting date and the group audit report dates are very important also. And the procedure may be done by the group auditor or the component auditor in the areas of subsequent events. They need to review subsequent events that affect the financial statements, reporting, and also the audit report date. So, for example, during consolidation, the group auditor decided acquisition. So these are examples of areas where the group auditor could harness through procedures and pick out audit issues. So ISA 600 expects the group auditor to understand, test, and evaluate the consolidation process. So that's part of some exam tips you may have around group questions. So he needs to focus on accurate assessment to be able to facilitate the objective or achievements of those objectives. This is very key. All right. Any questions, any contributions? We're running to see how to beat time. Fantastic. So that will be the end of the role of the group auditor with regards to consolidation. Just one section and we are done with that unit. Fantastic. Any question? I think we're in the last unit for these group audits. This is good. Any question? So that can run before, we can end before 10:30. If possible. I don't want us to get to 11. All right. So if we don't have any questions, let's look at this last unit before we go to bed. This unit speaks to documentation and communication with those charged with governance on group audit issues. So the first section is documentation. The group auditor must maintain comprehensive documentation, which is very important to demonstrate understanding, coordination, and review of component audits. So everything must be documented. If it is not documented, don't forget we said in audits it is not done. So he must maintain documentation of everything, and every activity, every correspondence must be documented and in writing to perform the audit so that I can have sufficient appropriate evidence on everything he has done, so that somebody or a different group of a group auditor takes over the job could have a trail of what has been done and how the job has been done over time. So required documentation includes areas around components analysis, documentation to identify all components and mark those significant to the group, and those insignificant has to be documented. Also, documentation around type of work done, specific work performed on each component's financial information needs to be documented. Also, the extent of involvement in the group auditor's work with that of the component must be documented. It needs to record how much the group auditor participated in component's auditor's work. This has to be documented, and the level of percentage and the frequency of involvement has to be documented. Also, communications has to be documented. You have to keep written correspondence with component auditors on group audit requirements. If you notice, most of the AI virtual meeting now have AI reads. Have you noticed that? Some of these artificial intelligence platforms have AI reads. So even if you have virtual meetings, they are transcribed into script for you to document everything. So all these are forms of evidence that could be gathered, correspondence to have. If it's a virtual meeting, you say, okay, how do I get there? Well, nobody can transcribe those videos to. So you have AI reads. As you're having your meetings, AI will just read it for you straight. The only is just to copy it and paste it in a document. So it's very important to have this documented evidence, whether through virtual meetings or physical or online meeting, whatever it is, you should have it documented and filed. So around this, you need to think around the analysis, the work, the extent, and communication the group auditor performs on the components. This shows the group auditor's oversight, his oversight and responsibility in compliance with ISA 600 on the general audit of the group. This shows he's involved extensively. So that's the first issue around documentation. Secondly, communication with group management. How should the group auditor communicate with group management? The auditor must promptly inform group management of key control and fraud issues affecting the group. Promptly. So when issues emanate or emerge, he has to immediately discuss with management. That's the first step. He must communicate around material weakness in group-wide controls. He should communicate significant control weakness found at components that were discovered and documented. Weaknesses reported by component auditors that impact the entire group. He needs to call management's attention to it. And also any fraud or suspected fraud identified by the group or the component auditors needs to be brought to the fore to management. So remember, the purpose is to ensure timely awareness and corrective action by management. Auditors need to always bring management's attention, not that you want to go and report them to the board or to the shareholders. No, something is wrong. Rectify it. That's the essence. Continuous improvement is just the essence of audits, whether internal or external. Excuse me. Continuous improvement is the reason or the objective, not to report to say, oh, we have caught thief. No. If something happens, call their attention, and that's what internal auditors mostly do. See, oh, this is a control weakness. We address it. Even if you are going to report it, what mostly the board will ask you is, have the management or the process owners in charge, have they done anything about it? If there's not done, that's when there will be wahala for those process owners. But when you are reporting, okay, this is what we found, this is what management did about, this is what management has done about it. Is it resolved or unresolved? So generally, that's what group auditors should do also. They should ensure that timely management is timely aware. They are aware of what is happening and their effort. What is their plan to correct those issues? This is very important. So managements are those charged with governance. We'll discuss this extensively later in the successive chapters we'll be discussing on. So that's generally how the group auditor should communicate with those charged with governance. All right. Any questions? We're running. We're trying to beat time. But please ask your questions. And I hope we are not sleeping. We're usually quiet.
Not at all. No, sir. We are.
Okay, fantastic. Good to get that feedback. I know we'll not sleep. Let's not sleep. We'll soon finish. All right. This next section speaks to communication with those charged with governance of the group. And the group auditor needs to. Why is my screen frozen now? Okay, it's back. All right. So group management and group those charged with governance are two different people. So you can have management as directors and you have those charged with governance as shareholders or senior managers, whichever it is, or however it is separated. There needs to be communication with whoever is in charge, and the group auditor needs to communicate very effectively. So he must communicate with those charged with governance, inform them of key audit plans, risks, and issues beyond ISA 260 or 265 requirements. He needs to communicate around the type of work planned on component financials and also the group auditor's level of involvement in component audits. He needs to communicate appropriately to them around areas with this. He also needs to communicate concerns about component auditor's quality. Where he has issues with component auditor's quality that will impact his work, he needs to communicate with those charged with governance on recommendations on changing them or refusal to obey his letter of instruction. He needs to really communicate his challenges and any area he's having issues with the component auditor's quality. Very important because it will impact his work and he's responsible solely for the entire group's opinion. Also, limitations or restrictions on the group audit, for example, access issues, even reports from the component to him needs to be communicated to those charged with governance. Areas around fraud or suspected fraud involving management or key staff affecting the group's financial statements needs to be brought to the fore of those charged with governance. And the purpose is to ensure transparency, ensure he's responsible, that's providing oversight, and he's accountable in the group audits governance. This is very important. So that's it about this unit on documentation and communication with management and those charged with governance. So this is a big wrap up, and I'm glad we've landed on a soft note. So we should be able to summarize after this class the components and the considerations of group audits, describe how component auditors are used and the various communications that they will partake in. And by now we should be able to explain the responsibilities and tasks involved in performing a group audit in compliance with ISA 600, including planning, performing, and reporting on group financial statements audit. So you should be able to explain what a joint audit is about, which is important and one of the areas the examiner tests frequently. He has not brought it for some diets now. Maybe he will test joint audits and should be able to look at areas where joint audits are necessary and also discuss the benefits and drawbacks of a joint audit, which is also a frequently tested area, and also discuss practical considerations when undertaking a joint audit. All right. So ladies and gentlemen, that will be the end of group audits. We rounded up